The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts that matter, let's have a quick look at what traders are watching. And Nvidia to take a US $5.5 billion hit in charges after the Trump administration limited exports of its H2O artificial intelligence chip to China, a key market for one of its most popular chips. United Airlines forecasting lower than expected profit for the current quarter and warning of downside risks to its full year outlook if the US economy slips into a recession. US import prices unexpectedly fell in March, pulled down by decreasing costs for energy products. That is the latest indication that inflation is subsiding, or was subsiding rather, before President Trump's sweeping tariffs came into effect. China's economy expected to have slowed in the first quarter of the year in the face of a prolonged property downturn. And the Bank of Japan Governor Ueda saying the central bank may need to take policy action if tariffs hurt the Japanese economy, signalling the potential to pause the bank's rate hike cycle. Let's get into the technicals now with Jonathan Tacadena from MPC Markets, discussing ETFs and places to hide during market volatility. You've been calling gold for a long time, been right for a long time. What are you seeing in terms of where people are hiding now?
Where people are hiding. So one thing that you got to kind of step back is the way I'm seeing the markets now is we've had a really, really great bull run for a very long time, and it's all been funded by cheap money. And what the main thing that I observed in the most recent pullback is interest rates or bond yields actually rose during that time. So usually when markets fall, there's a bit of a flight to safety in the bond market, but that actually didn't happen this time. So what that tells me is that that whole cheap funding that we've had for over the years, that's gone now, and we're going to probably head to a stagflationary environment. So what that means is that you can't hide in bonds, and you have to be very selective on where to hide within stocks as well.
So you're looking at ETFs. Let's start with BUG, B-U-G-G.
Yep.
So this is the Global X Cyber Security ETF. I mean, I guess it does what it says on the tin, but tell us what you're looking at here.
Yeah, so what you have to try and think of is that even if the stock markets will be more volatile, there will be just some sectors that have, say, either demographics or just trends that will just fuel it, and BUG is one. So we all know that we're all going more digital now. Everything's on basically on the internet. Everyone's getting more comfortable purchasing on the internet, sending money across and things like that. And so what that means is that this ETF has that underlying trend that should mean that it should outperform the overall indexes over the time. And it's just if you see it, it's pulled back a little bit in this market pullback. But if you have a look at the companies that are under it, most of them are at least 50% in cyber security. So what that means is that just as long as more people are using the internet, and that trend will likely continue, these stocks should do well.
So when we look at volatility, it obviously creates a lot of opportunity a lot of the time. But when you're looking at low volatility, high yield, what does ZY US tell us?
Yeah, so it's just the whole Warren Buffett method of investing. He looks for value.
He seems to do well, doesn't he?
Yeah, he does. Yeah. He's been sitting on a bit of cash as well. So he's done really well. But when underlying fads or trends coming through, he just basically wants to have companies that are just very, very good underlying companies. That's why he likes insurance companies a lot. And so what we have here is just another Global X ETF, and it just has high yield, low volatility stocks within there. So we're talking all the blue chips. It's like 50 blue chips spread across all large caps as well, mostly in the US. And you can just see, even though the Nasdaq was highly volatile, this has pulled back a little bit, but it's outperformed in comparison. So I think the pullback in this from top to bottom was something like 7%. But in the meantime, if you have a look, it pays a quarterly dividend as well. So at the bottom of each of those charts there, that circle there's a dividend there as well. So the dividend yield isn't as high as what we're used to here in Australia, and that's basically because US they're more focused on growth. But it's one way to play So rather than just having all your eggs in that sort of S&P basket, you can have it here, still have some of that exposure, but you're exposed to more of the quality stocks within that space.
And what about covered calls?
Covered calls. So, being an options guy, and cut my teeth in options a long time ago. Even though the options market's really dying here in Australia, it is booming everywhere else in the world. And so, covered call ETFs. This is just one way to get exposure to this strategy. What you do is you just buy stock and sell calls against it. And if you have a look at some of the actual indexes around the world that just focus on this actual strategy, they've all outperformed the underlying index by about 4 or 5% each year. So rather than having to learn all that, you just invest in this ETF. And the great thing about it is you can see it has fallen, but every one of those circles at the bottom of the chart there is a dividend. So this actually pays a monthly dividend, and it's close to around about 0.8 to 0.9% each month. So it's actually been in line with the actual index throughout this volatility. And what we'll see is that as the index gets more volatile, you just have that underlying cushion of monthly income from the option selling.
Now, Jonathan, you have a lot of fans out there in AusBiz land. I get a lot of emails about you, and I'm just going to read this one. You should be proud of this.
Yep.
Hi, Juliet. I continue to be impressed by Jonathan's succinct and pragmatic commentary, stock picking, and most importantly, getting the entry and exit timing right. I think Mark Gardner might have to print you another certificate off the printer. Now, so he says this viewer would find it valuable if Jonathan could specify where he would place a stop loss when recommending a buy, because there are no guarantees. Nothing is 100% accurate every time. So what would your answer be to that?
Yeah, so the best thing to do is actually plan ahead before you actually place the trade. So what happens within trading is that your ego gets in the way and your emotions get in the way. And the only time that you actually have a clear view on things is actually when you don't have money on the line. So try and have the sort of a set play in mind. It doesn't have to be like a hard stop, but let's just say, I think the gentleman was talking about, or I'm assuming it's a gentleman, he talked about Catalyst. So that was a gold explorer and producer out in Western Australia. And then you have to have a plan before you invest, and just know that when it does run, you got to have a kind of a market cap that you're looking for in terms of target. And the other thing that I like to use is technicals. So my two favorites for taking profits are trend lines and moving averages. So, as an example on Catalyst, if you have, say, a 21-day moving average, if it just falls below that, time to exit. And doing it that way makes it quite mechanical, and it gets the emotions out of the way. So it's like, if price goes below a certain line or a bit below a certain trend line, just exit and get on to the next trade.
And speaking of Catalyst, this viewer bought in when you mentioned Catalyst on the trade on the 14th of August. He says it's still going strong in a bullish trend. Well done, Jonathan.
Yeah, he's probably done a 2 or 3 bagger since then. So yeah, he's done really well.
What is a 2 or 3 bagger? That sounds illegal. All right, Jonathan, thank you. Jonathan Tacadena from MPC Markets. That does it for this edition of The Trade. We'll catch you next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.